Hello friends and welcome back to Edupedia World. In this session, we'll be understanding the meaning and difference between some terms which seems synonymous in meaning but actually they are not. That is bookkeeping, accounting and accountancy. First we'll understand the meaning of these three and then we'll move on to differentiate between these three. Let us first understand the meaning of bookkeeping. Now, bookkeeping starts with recording of the transactions. And how do we do that? Suppose I start a coffee shop. For the same, I use rupees 5,000 cash to buy coffee bean bags. Now, if I have to simply record this transaction, it would be like coffee bean bag rupees 5,000. This is what generally people do to have track of where they have spent their whole month's salary. Suppose someone spends rupees 2,000 in a month on vegetables, rupees 10,000 on the rent of his house, and rupees 4,000 on the electricity bill payment. So he'll simply record this transaction in his mobile phone or in a notepad as follows: vegetables rupees 2,000, rent rupees 10,000 and electricity rupees 4,000. Because he just needs to keep a track of where he has spent his earnings. And you see that all these transactions, the personal transactions which are taking place, is not to earn further money on it. It is just for the personal consumption of that consumer. Is he buying vegetables to further sell it? No. Is he paying rent of this house and doing business in this house? No. Is he paying electricity bill of a particular place where he's doing business? No. So all these transactions are for personal consumption. So this simple recording will do. But in case of a business transaction, a businessman cannot do so because whatever he is purchasing is not for his personal use. He will be doing business with it. So if I simply record the transaction as coffee bean bag dash rupees 5,000, this particular recording will show the effect on cash that my cash has been reduced by rupees 5,000, but on the other hand, there will be no effect on my business. So I have to record dual effect of all monetary transactions that takes place in my business. So for the above transaction, my entry would be like this: coffee bean bag being purchased for rupees 5,000, and for the same, I'll pass on a journal entry. What is journal entry? This you will learn in sessions to come. But as of now, in this particular transaction, you simply understand that cash will go out and coffee bean bag will come in. So there is dual effect of this transaction, that is, first effect is on cash and the other effect is on the stock of my business. Now, this was about recording the transactions. Next step that we follow in bookkeeping is classification of the transactions. And what is classification? Classification is grouping of the transaction according to the nature of the transaction. So going by the above example, I will make separate accounts of cash and coffee bean bag, which will come in stock, because these two things are different in nature. So just one single transaction will result in two different accounts. First is cash and the next one is coffee bean bag, which will come in stock. Likewise, there are n number of transactions which takes place in a business. So in bookkeeping, a bookkeeper will be mainly concerned with recording and classification of identified transaction, and that too in terms of money. So we see that the first two steps of accounting process, that is recording of transactions and classification of transactions, takes place in bookkeeping. So after bookkeeping, next term is accounting. Accounting starts where bookkeeping ends. So under bookkeeping, after recording and classifying, in accounting we start with summarizing the transactions. What do we do in summarizing the transactions? From the classified accounts under bookkeeping, we make profit and loss account and calculate whether a business is earning profits or running into losses. If the expenses are less than income, then the business is running into profits. If the expenses are more than income, then the business is running into losses. After finding out the profit and loss, we also find out the financial position of the business. And how do we do that? We find out that whether the business is running more on owner's fund or it is being financed more by creditors fund, that is, it is having more of liabilities. So under summarizing, we find out the profit or loss of the concern and also the financial position of the concern. After summarizing, we analyze and interpret the results which we have calculated. So under analyzing and interpreting, what we do is, if there are profits, then we see that what were the profits in the last year, and if the profits of this year is less than the profits of the last year, then what is the reason behind? If there are losses, then what is the reason behind? If the financial position of the business is weak, then what should be done in order to improve it? So all these steps is being taken under analyzing and interpreting of the results. After analyzing and interpreting, the same results is being communicated to the external users of accounting information, and these users of accounting information analyze the result as per their need. So in accounting, what are the three things that takes place? That is summarizing, analyzing and interpreting, and communicating the results. However, if you see in actual practice, the accounting process includes the bookkeeping function also. If you see in a small concern, the accountant performs the work of a bookkeeper also, because they have less budget to spare. So coming on to the differences between bookkeeping and accounting, because now you know the meaning of these two terms clearly, so it won't be a big problem to differentiate between these two terms. So let's have a quick look at the differences. First one is on the basis of a scope. Bookkeeping is a very small part of the accounting process, so its scope is narrow. On the other hand, accounting starts where bookkeeping ends, so its scope is broader. Next is stage. Bookkeeping comes at the primary stage because everything starts with recording of the transactions. And again, accounting comes into picture where bookkeeping ends, so it comes in secondary stage. Next one is on the basis of objective. The objective of bookkeeping is to maintain systematic records, whereas in accounting, it is to analyze and ascertain the net results. Next one is nature of job. A bookkeeper has to record each and every transaction which is done on daily basis, so it is a routine job. Whereas in accounting, it's basically more related to analyzing the results, the profit and loss and the financial position of the concern, so it's analytical in nature. Next, who performs this? Bookkeeping can be done by junior staff, whereas accounting needs senior staff. And because junior staff does it, so limited level of knowledge is required in bookkeeping, whereas in accounting, higher level of knowledge is required. Next is, do we require analytical skills? Obviously, because bookkeeping is routine in nature, so analytical skills are not required. Whereas in accounting, it is analytical in nature, so obviously we require analytical skills. So this was about bookkeeping and accounting, and most people will understand that bookkeeping and accounting is different. But when it comes to accounting and accountancy, it's like a person studies accountancy and becomes accountant, and now he's doing accounting. So accounting and accountancy must be the same thing, but it's not. Let's say one of my friend Dali and I decide to meet at 8 a.m. the next day. I reached the venue much before time at around 7:30 a.m. and started waiting for him. I was waiting till 9 a.m. and he didn't show up. I called him, but he didn't pick up my call either. So I became really angry and went back home. Interestingly, at 8 p.m., I got a call from him. And he said,
Hello, Ruchi. Still putting on your makeup? Come on, it's past 8 o'clock. I'm here. Where are you?
"But dude, we planned to meet at 8 a.m., right?"
Yeah, it is 8 a.m. I'm here. Where are you?
"What the heck? Are you nuts? It's evening 8 p.m., Dali."
That is what I'm saying. It is 8 a.m. in the evening. I'm here. Where are you?
Oh, Dali, what do you think AM means?
Duh. A.m. means after morning, which is evening, and it's evening 8 a.m. Where are you?
And what do you think PM means?
If a.m. is evening, then p.m. is opposite of that, which is morning, right?
I went crazy, wasn't sure that whether I should laugh or be angry. I don't know under what rock he was living all this while, but he clearly had it wrong. We know AM is morning, PM is evening because it's universal. Thank God there are some universal laws which we follow, otherwise the world would have been in so much mess. Similarly, when we talk about accountancy, it refers to a systematic knowledge, principles, and techniques which are universal. So whether we talk about bookkeeping or accounting, we follow that systematic knowledge, principles and techniques so that there is no confusion and our results are accurate. That is why we can compare the results of a concern with another concern and also from year to year, no matter even if the accountants get fired. So after knowing the meaning of accountancy, let's get on to the differences between accounting and accountancy. Accounting is basically concerned with summarizing, interpreting, and communicating the results thereof, whereas accountancy are those universal laws, principles, rules, and regulations which is observed while recording, classifying, and summarizing of transactions. Next one is scope. Obviously, accounting has narrow scope, whereas accountancy has wider scope because it starts with bookkeeping and goes beyond accounting. Now, relation of accounting depends on bookkeeping because after we get the classified data under bookkeeping, we start summarizing upon the results, whereas accountancy depends upon bookkeeping and accounting both. And last but not the least, the function of accounting is to ascertain the profit or loss and the financial position of the business and then to communicate them to interested parties. Whereas accountancy includes the decision making function, that is, on the basis of the results, certain strategic decisions are being taken in order to improve the results. So this was all about the three terms bookkeeping, accounting and accountancy. Now let's do a small exercise. So your question for the day is, bookkeeping is mainly concerned with option A, recording of financial data, option B, designing the systems of summarizing the recorded data, option C, interpreting the data for internal and external users, and option D, preparation of financial statement of the business enterprise. So this is a very easy question. It will actually help you out to understand that whether you got the basics right or not. You can comment with your answer in the comment section below and I'll meet you in my next session. Till then, thank you and stay tuned.